Hey, Michael, what's up? How's it going?
Hey, happy Monday. What's going on, man?
Doing good, man. Just trying to get the week going, grind it out. So, hey, everybody, welcome to Real Talk. It's Brandon and Michael here. We're gonna discuss a few things, debunk a few things, talk real estate, talk investments, lending, all that good jazz. So, so I want to touch base really quick. I think you were at a trade show last week. How did that go for you?
Yeah, I was at the Florida Association of Mortgage Professionals, the state association trade show. So they have a big trade show. It's probably one of the biggest in the country. A big, a bunch of mortgage guys geeking out for. I had to go in on Wednesday to oversee proctor the continuing education, and then the trade show itself was Thursday, Friday. And here in beautiful, I'd say sunny Orlando, but it's rainy as heck lately here the past couple days. We've got that. There's a tropical storm. I don't know if it's a hurricane now or not, but blew past us on the Gulf, and we got a little bit of wet. But
It's one of
yeah,
those
it's really
lawn
cool
chair
because there's a lot
knockovers.
of yeah. Well, we're in the rain bands, that thing when it's rotating, it's like sucking moisture out of the Gulf of Mexico, but it's kind of pulling all that wet over us, and so
Okay.
it ends up dumping a lot. It was pretty. I'm looking out right now. It doesn't look windy anymore, but it was windy. It wasn't bad. Not like a major storm. It was just a little rainmaker. I think there's a little minor flooding on the coast of Florida on the west coast, but yeah. So yeah, the trade show was good. We had
Yeah.
some. It's always good for me to see what's out there, what's new. We also have had a couple of good meetings with we had a meeting with the insurance commission. Met with I just have to have the card right here, the deputy commissioner for property and casualty insurance regulation for the state of Florida, because insurance right now is a huge deal in the
Hmm.
mortgage and real estate markets in Florida. Met with OFR, the Division of Consumer Finance for the Office of Financial Regulation, and we've got a pretty good relationship with them. I get involved with them periodically for producer level fraud stuff. So we have a meeting with them once or twice a year. Um,
So you got some good
so it's
news
good.
from those guys, or what?
Which the insurance guys, yeah,
Yeah.
yeah. Let me tell you. So we had it was a meeting. There was also so the state of Florida has its own insurance company. It's called Citizens, and it's like a state sponsored or state subsidized insurance carrier, and it's considered the carrier of last resort. But for a while, it was the freaking carrier of only resort because there was not a lot of activity in the market. But and a big part of that is not hurricanes. And people would think it's hurricanes. It's not. A big part of
Hmm.
that is the I call them the billboard lawyers. I don't want any of them
Right.
coming and knocking
Oh
on my
God,
door.
I hate
But
those
the bill
guys.
the billboard lawyers, and give you a simple example, they do these roof claims, and so they can send people through neighborhoods, especially after any kind of storm. They send people through these neighborhoods. They go up and they'll do an inspection. They'll look for any sort of damage. They'll attribute it to the storm. And then they'll, in the series of documents that they have the homeowner sign, one of those documents will be an assignment of benefits. An assignment of benefits basically means, hey, if we recover anything above or separate from the cost of repairing your roof, well, that's for us. And so they file the claim, they get the roof repaired, and then they file a lawsuit against the insurance company for timely or who knows what. Uh, and when they do that, they put the money in their pocket,
Yeah.
and there's just this is you know claim after claim. All these insurance companies, a lot of them just left. They were losing
Hmm.
money. They were literally losing money. You know what I mean? And I know it's crazy, but a business has to make money to stay in business. So these insurance companies losing money, they couldn't work in Florida. And so what happened is after, you know, all of these ongoing increasing insurance costs, we finally got tort reform, and they've really restricted what they can do, these sort of frivolous lawsuits. And last year, 2023, we got about, I think it was 6 by the end of the year, 6 new carriers came into the state of Florida. This year so far, we're in, the beginning of August. So we're, a little more than halfway through the year. We have 8 additional new carriers that have come into the state. I don't think we're going to see insurance costs go down, but they're going to stop going up so fast. Yeah, it's going to help get it under control.
Yeah, and
So
it's
a big deal, man.
That was
It's a
the
really
misconception everybody was saying, man. Like, everybody was like, when I tell people, I'm like, yeah, man, insurance premiums in Florida are insane. Like for anything,
right?
It's home insurance, car insurance, everything. And they're like, yeah, you guys got hurricanes, so everything gets destroyed down there. I was like, that's not why. That's not why.
Hey, check this out. So property and casualty, auto insurance. So when I met with the insurance commission, this is early or mid last year, about this issue, one of the regulators said, listen, in 2022, one law firm in Miami-Dade County filed 72,000 claims against auto insurances for glass. So in Florida, if you have a crack in your windshield, the insurance carrier is required to repair it for free with no deductible. It's just a thing.
Jeez.
And these jackasses were papering cars in parking lots and whatever, getting and they do some online things, scheduled to get your thing repaired and at no cost to you. And of course, what were they having them sign? An AOB, right? An assignment of benefits. And so they'd get the windshields repaired, and they filed 72,000 claims. And so the insurance carriers, it's cheaper for them to pay, $500, $1,500, $2,000 to the law firm to get them to drop the suit than it is for them to defend a frivolous lawsuit.
Yeah.
So that's why our insurance is so high. I mean, they're not making profits. It's these scumbag billboard lawyers that are so they're not even benefiting the consumer. It's just benefiting the lawyer.
Are these laws by any way, like they're going to come out, whether they've started coming out with these regulations? Are they pretty much outlawing that assignment of benefit for insurance claims?
Yeah, it's now not legal, right? Like they've changed the way that it can work. Obviously, if an insurance company is negligent, they can be sued. But these blanket, AOBs are not doable anymore. And so the only thing we're seeing now is, and they're still coming out, they're still doing some lawsuits, but what they're claiming is that it was damage. The only lawsuits they can file now are lawsuits for damage that was done before tort reform, right? Before the damages were changed. So they're still trying to go, get stuff. I mean, it's their last gasp of trying to, protect their bottom line.
The good thing about that, I'm up in Georgia, so I think Georgia is just gonna. They've always liked to follow Florida, so they're just gonna follow Florida eventually here in the next year or two. And hopefully Georgia gets the same thing, because their premiums are insane here, and we don't really get hurricanes. So,
right.
So there you go.
I mean, it was never hurricanes here either. I mean, it's not hurricanes. It's these, it's the lawsuits. And sure, it doesn't help, when there is a hurricane, when there's wind or water, that creates a problem. It doesn't help. It's just freaking throwing gas on a fire.
Oh yeah, and I wouldn't put it out of the scope of these attorneys groups and stuff to create this propaganda agenda that's like, oh well, the insurance rates are going up because of the weather conditions and the hurricanes.
Of course. Well, they're not going to. Yeah, of course. They have to pretend they're the good guys. It's how they sleep at night.
Yeah, we're here to help you and save you, and it just makes me want to punch all those attorneys in the face every time I see them.
I'm telling you. But the other problem in Florida, there's condo issues also. And so a lot of condos, It's a lending issue now too, very much. We can't get loans for condos. It's very difficult to get financing for a condominium in Florida right now. And a big part of it is they have these new reserve requirements because if you remember, I guess it was last year, Sunrise, the hotel that collapsed, right? The building just fell down.
Oh yeah.
Bad. It was, deferred maintenance and deferred maintenance and deferred maintenance. Yep. And then, and so as a result, the state came in and said, "Hey, you know what? We got to fix this," and rightfully so. So now they're fixing it, but what's happening is these associations are all of a sudden having assessments. Maybe their annual, let's say it's $5,000 a year is the annual assessment, $600 a month or something. They're getting special assessments that are $5,000 a month, and they're on all the homeowners, and they're they can't pay it. So now people are going in default, they're losing their homes, it's just a disaster. It's a disaster. And so what do you do?
Hopefully they can
they're trying to work
figure
on
that
that.
out.
That's a toughie. That's a toughie.
So speaking of investments, I saw the other day, I'd run across, because I spend most of my time just searching videos online, because I don't have anything better to do. So I saw a video the other day. This guy was talking about, some kind of okay, well, if you're a first time home buyer, this plan, this thing, this is how you get this loan or whatnot. But I'll save you the backstory, and I'll play it here for you and everybody else, and see some feedback. Let's see, trying to pull it up real quick. My scattered preparedness here, be able to share the audio. Here we go.
I can't wait. I'm excited to see what you're going to be sharing, Brandon.
Can you not see it?
Not yet.
Uh-oh. Let's see here. And of course, okay, the audio is off. Here we go. I know it's in. I can see it. It's here. And
this podcast has been
software.
Canceled due to technical. Oh, here we go. Something's happening. It just went from gray to white.
Something's happening.
The screen.
Gray to white, white to gray. Yeah, there you go. Some little blink. Brought to you by realpros.org. All right, let's see here.
Or you could just tell
the money to put down.
There we go.
Something happened for a second.
Why wouldn't you take the RSP loan? Get 30, 35 grand. Don't take the money from your own savings. You're going to take that 30 grand. You're going to put it in the RSP. After 90 days, you can take it out and buy your property. So let's say today, you want to put down 5 grand. For now, 10 grand. Within 90 days, you're going to have the rest of the money to put down. Next year, in February, when you file your taxes, you're going to get a tax refund because you put money in your RSP. You're going to get like 12 to 15K back. You're going to use that 12 to 15K to make your loan payments.
Yeah, I mean, that didn't sound too believable to me.
So, all right. So first off, our RSP is a Canadian, like a 401k type of thing. It's a Canadian qualified plan, but you hear people talking about that here, as well. Some of the tax laws are different, here than in Canada, but so the concept is if you've got money in your qualified plan, right? 401k, you can borrow money to buy a home, but kind of begs the question. I mean, how many people have? Is that me or you? It just said it was reconnecting. Can you hear me?
Yeah, I can hear you.
Okay. Yeah, my screen just said reconnecting. So, but one of the things that happens with these, scenarios is, first off, how many first-time home buyers have enough money to buy a house in their qualified plan? I mean, maybe they have something to put toward the down payment, but unfortunately, I would say this, great concept. If someone's got the money in their plan, And I'm going to put a pin in the thing that I don't personally think 401ks and IRAs are necessarily good things in the first place. We could talk about that in a minute if you want, or another time. But at the end of the day, if somebody has money available, then sure, they can take it out, they can withdraw it. They're either going to pay interest or a penalty, or have to pay back a 401k loan, to buy the house. And, I think it just kind of goes back to, if you're talking about first-time home buyers, how much money do most people have in their qualified plan in order to put towards the house? In my experience, first-time home buyers typically don't have a ton. Right. It's kind of the whole idea. Hey, buy a house in your IRA, buy an investment property in your self-directed IRA, right? Okay. A lot of people don't have the money in that instrument to do that, so there's that trade-off. And then the other piece is, personally, my opinion, unless you have an employer match, right, where you're contributing to your IRA or your 401k, and typically it's a 401k, you're contributing and the employer's matching X. Well, that's free money. Take it. Absolutely. But I wouldn't ever contribute more than the match. It's just enough to get the match, and that's it. So there's a concept that when it comes to planning your funds, having liquidity, use, and control of your money, right? So if I've got, let's just magic wand, I've got $100,000 in my 401k, and I've got $30,000 car loan, and whatever, a rooms to go loan for $10,000, and so on. And I've got $50,000 of consumer debt. I'm paying interest on consumer debt while my 401k is outside of my ability to access. I can't access it. So the argument is, I'd rather keep liquidity, use, and control of my money to manage my, my expenses, buy the car cash, or even they have this process called infinite banking that uses a certain type of insurance, whole life insurance policy. And, that's a different animal. I don't want to unpack that bag, but, I'd rather have liquidity of my funds than, have all this money tied up in a qualified plan. I'm saying that collectively because it could be a 401k, it could be whatever, right? But that qualified plan, people think, well, I don't have to pay taxes on that. No, you're kicking the can down the street. You don't have to pay taxes on it until you do, right? You're going to have to pay taxes on it. So my feeling on it is, rip the Band-Aid off, pay taxes now. Most people, when they're in their prime working years, maybe they own a house, maybe they have kids that we call little tax deductions, right? So they have tax deductions, and they're able to reduce their tax liability by the deductions that they have. If they wait until they're pulling money out of their qualified plan because now they're in the retirement age, guess what a lot of people don't have? They don't have deductions, or as many deductions. And so the argument in favor of is, I'm earning less money, so I'm technically paying less taxes. But I'm going to argue, if it's 20 years down the road, you have less deductions. And my guess is, and I don't want to say there's a conspiracy, but my guess is that the IRS is going to continue to raise, or that the federal government is going to continue to raise taxes. Taxes aren't going to go down. They're going to continue to eliminate deductions. So the taxes are going to go up. So if I wait 20 years and I pay tax on money that I earned today, 20 years from now, I think I'll probably be paying higher taxes. That's my guess, my thought. So did I lose you?
Oh yeah. There's a little bit of a delay
I have a little.
right now,
I have that trying to reconnect
the
thing.
recording will be fine.
Okay. Yeah. And you know what? And
I
if you
think we did lose each other.
if you don't want to believe my conspiracy,
What's that?
You got me now? You got me?
Yeah, I got you there.
I think it's maybe the storm outside. We're still having some storm. We may have some signal issues, but
Right.
I would say if
So one
if
question
you
I wanted
don't
to ask
believe
about is at the
my
end of that video,
thoughts
that guy's
of
talking about
how
a big
the
tax
IRS is
deduction
going to
when you file the
process these,
taxes if you use
Yeah.
like the method, like your retirement plan, your 401, stuff like that for down payment. Is that true? Are you looking at getting a tax deduction, or how's that work?
you very well.
Oh, I think we lost Mike.
Say it again.
Michael. Yeah, we're gonna get back. Let's see if Michael comes back here. But yeah, I wanted to find out if if there really is a tax return or a tax deduction.
It keeps telling me. It keeps telling me trying to reconnect. Can you hear me? Okay.
Yeah, I got you back now. Yeah. So what's the situation on the tax deduction that he was claiming in that video? Is that real, or is there a tax benefit?
maybe in Canada, but I mean, obviously, when you buy a house, you're going to get a deal. I mean, you're going to get tax deductions that you didn't have previously, right?
Mm-hmm.
Because you're going to be able to write off the interest and things. So I don't know specifically on using those funds if that creates some sort of tax benefit. I can't specifically answer, but at the end of the day, I think most people probably don't have the funds in their qualified plan for a down payment anyway, or a sizable amount. I'm okay. Listen, I'm in favor of if you've got money in a 401k and you're going to buy a house, absolutely put the money to work. But at the same time, I'm not necessarily in favor of a 401k in the first place, or qualified plans.
Yeah.
What does the name 401k come from? It's the section of the tax code where that benefit comes from. So the IRS tax code, do you think it's written in our favor? I mean, it's not like
probably not.
That's a tax program, and us tinfoil hat wearing conspiracy guys tend to say, what they like that because they know, in 20 years, 30 years, whatever, when we're accessing those funds, it's gone up in value. We're going to pay tax on the oak tree, not just the acorn that we put in. We're going to have fewer deductions, and the effective tax rates are going to be higher because it's going to be 20 years in the future.
Yeah.
And
they keep printing money, so of course it's going to go up.
Yeah, absolutely. I would personally say, what, if someone, everybody should have an entity, an LLC. Everybody should have an LLC, and and try to produce some sort of income from that LLC, but also use it to create a reasonable amount of deductions. If you're a W-2 employee and you don't have an entity of some kind, then I think you're missing the boat.
Yeah, I tell people that all the time, man. I'm like, you own a house, you do this, you do that, like, how much do you make? Like, and you don't have an LLC, or you're not trying to do some kind of like 1099 work on the side with somebody. Like, a W-2 is the most expensive way to make money. It's like, I'm like, the car you drive to work, the clothes you drive to go to work, like all these different deductions you could do once you actually have an LLC and you're not trying to bucket it into your W-2 filing. And
exactly.
So, as long as you don't continuously lose money big, they're like, well, if I lose money and losing money, I'm just writing all this stuff off. It's like, it's a business. It's a write-off. At the end of the day, you're the person, behind the curtain that it all comes back to. So if you can reduce your tax burden, then reduce it. I mean, that's what all the millionaires do. You think those guys are paying their tax percentages? Absolutely not. They're writing as many expenses off as they can,
Well, and they should.
They're not cheating.
I tell people all the time, it's funny when I'm talking to a business owner and we're talking about their income to talk about loan qualification, and they're like, oh, I'm so embarrassed, I don't have, I really write everything off. And I'm like, bro, don't feel embarrassed about that. Right. That's our patriotic duty, in my opinion, That's our patriotic freaking duty to keep money out of the hands of the government to the greatest extent possible, so that we're, protecting our country, not protecting our government. My opinion.
Yeah, exactly. I mean, I'm, for myself, I'm more for like kind of like a simple blanketed tax on, consuming, like kind of like a VAT tax. A lot of other countries just have a simple VAT tax. It's like, why can't we just have like a VAT tax and that be it? Because
I've been saying it for
unfortunately
years.
in our country, it's the poorer people. Yeah, the people that bring in less than 100K a year pay 70-80% of the tax code, or the taxes of the country. And so it's like, yeah, I mean, don't take that to the bank, as our little disclaimer says, this is just educational entertainment purposes only.
That's right. Yeah. I am not a CPA, a tax attorney. I'm none of those things, but there's a good Georgia guy. He's passed away now, I believe. Neil Bortz was a radio personality up in Georgia, and he was a libertarian, which I am. And he used to talk. He wrote a book called The Fair Tax, and it's basically a national sales tax. Simply a national sales tax. Take away national income tax and create a national sales tax. Think about it too. More and more and more, we have gig workers in our economy. More cash workers. We have, people who don't have social security numbers, or are able to work under the table and not file taxes, or self-employed people, like us, who, maybe we don't show, everything, or we create deductions and things like that. I'll say it like this: we take advantage of every legal deduction, right? And I mean, and there's nothing wrong with that.
Absolutely.
There's nothing wrong with that.
Absolutely.
And then what happens is, it's middle class W-2 workers who carry the burden of the tax, tax liability, because they don't have a way to hide it. They don't have something to write off. The lower income, people, often, it is not uncommon. People think, oh, they're getting screwed. You know what? It's not uncommon to see, lower income people get more money back than they put in. I mean, they're literally not paying taxes. The ones who are paying most of those taxes are, people who it's W-2, it's taken out of their taxes, taken out of their paycheck without them even really being aware of it. They don't even, it doesn't process in their mind. They don't see it. So you don't feel it if you don't see it. I think everybody should have to write a check at the end of the year and pay taxes at the end of the year. Write a check. They'd be a whole lot more concerned about the tax code than they are now.
Oh yeah, I mean, the biggest scam for me is this is the one thing I can't. It was a while back that I realized this. It's like, okay, well, if I fill out my was it W-2, or I think it's a W-2 you fill out when you get a job. Fill it out. You say, hey, I'm independent, or from head of household, or, single, whatever, or married. Like, you can fill that out to its accuracy. And then the government, or your employer is supposed to take out your income tax for the government, right? And then they pay that. They get that sent over. And it's like, okay, well, if you fill that out correctly, you're likely to get a tax return. And it's like, well, if I fill that out in such a way, like, shouldn't I break even when I file taxes next year? Like, in your mind, you're like, okay, I should break even because I filled it out correctly. But then you would most likely get a tax return, and that's their psychological brainwashery to say, hey, file your tax so you can get your return. And it's like, and you get a return, you're like, yeah, man, I got $3,000, $4,000 back in my tax return.
They think they're getting money back. They think they're making money.
And it's like, no, you just got your money back that you lent to the government for a year and got nothing on it. So you were out of pocket $4,000 or $5,000 all year,
Right.
just so the government can go blow your money, and then, oh yeah, by the way, you overpaid us. Here's your money back.
Well, and
Like,
people are carrying debt. But imagine,
oh
you know,
yeah,
you could if you got $5,000 back, you could increase your monthly income $600 a month and use that to
yeah,
cover your bills.
right, yeah. And people just
Crazy.
like, it's funny because like the W-2 workers that just pay their normal taxes and everything, they're like, oh, I want to go out and do my tax return. And then so us who are independent and business owners, it's like when taxes come around, we're like, all right, shit, like how much can I write off? Where's all my expenses? We're scrambling to like hold out. So we find everything that we could have written off is like, well, we didn't make this much money because we had to spend it all on these things. And so it's the other side of the coin, and people are like, oh, don't you have to write a big check at the end of the year? And I'm like, no, not really, because, because I'll break even because I have bills and stuff I have to pay, or maybe I'll write a small check to them or something. I'm like, because at the end of the day, like, I'm not here making all this money. My businesses are breaking even, close to breaking even or something at the end of the year. And so, well, at least most of my businesses do. And so, they're like, well, how do you do that? And it's like, and then when they see it and they hear me talk about it, they're like, oh, how'd you do that? It's like, well, all the stuff that you go out and you have to do so that you can go work for somebody. I do the same thing, but I tell the government I had to do all those things because I have to do them for my business. And I get to say, well, I didn't make that money because I had to pay for
Right.
that, pay for this, pay for that, pay for that. You can't do that as an employee because you don't own a business. So
Right.
people are like, what? Oh my God. And they're like, yeah, you work from home. You work from home. Now the company's getting to have a write-off for whatever they're doing for you working from home. And you don't get a write-off because now you don't have an office at home because it's
Right.
not your business. And they get so frustrated. I'm like, yeah, you working from home. If you put up an LLC, you actually can benefit from working from home more if you actually set it up right. So, but yeah, man.
Yeah. Well,
So
and I'd love to see more companies, allow employees to be an independent contractor. It's better in a lot of cases. It's better for the company
mhm.
because they have less
Oh yeah.
overhead. But the problem is it's not
Mhm.
always good for the employee because because of the self-employed taxes and things like that. I mean, it's a double-edged sword, But man, I just think do away with the IRS completely. Create a
Oh
national
yeah.
sales tax, and it wouldn't be hard. It wouldn't be hard. It would be a heck of a. People think, oh, that would be so. No, it isn't. Businesses already pay a sales tax to the state, right?
Mhm.
They collect a sales tax to the state or often county as well. No big deal. So, wouldn't be hard.
Yeah.
So,
Yeah, I think
yeah, man.
anybody that's getting to work from home should basically be a contractor now. I mean, especially for states like Georgia and Florida, where it doesn't matter what you do. If you decided to take a bathroom break at 9:20 in the morning, they can say, "Hey, come see me after you take your dump." Like, all right, I didn't like the fact that you went to the bathroom. It impacted our company. It slowed production down. You got to go. And then they file performance, low performance, and
Yeah,
boom, you're
yeah.
gone. So why does it
Florida's a right
matter?
to work state. Yeah, they call it right to work in Florida. And it basically means there's no reason you can fire anybody anytime for anything, as long as it's not
Yeah.
a protected class. That's a fact.
Yeah.
But
So I think, like I said, I think everybody working from home, at least in states that are not like very progressive liberal, where it's like, you cannot fire somebody, like those states, just work from home. Like I remember like kind of in the COVID time when I was still like trying to get out and work, I would ask people, I'm like, hey, would you be willing to do contract to contract? Like hire my LLC to work for your company? Like, and they were like, I don't know, let me, I'm like, I don't want to be your employee. I'm like, I don't want to pay all those taxes, man. Like, no, like, so yeah, I mean, everybody that works from home, I think should try to push. I honestly think if somebody was a W-2 worker and they went to their employer and said, hey, boss, I know I'm an employee here, but I really like to convert over and be a 1099 worker for you. I promise you that boss is going to be like, hell yeah, let me get the paperwork going. Like,
well, yeah, I
they're
mean,
going to be
not every company has the vision for that, you know, and a lot of companies, you know, listen, CPAs and accountants and bookkeepers and attorneys don't always see things the same way as an entrepreneur sees it, you know. So sometimes there's things that don't make sense. That runaway bird.
Oh man.
Hey, relax. What happened? The my home office overlooks the front of the house, and there's the trash truck is going by, and it just scared her. And she was on top of
her
her
cage. You got a little guest appearance.
Yeah, guest appearance from Taffy, and she's like trying to hide because she's freaked out. And if you probably can't hear her, but she's like breathing hard. She's like, "Come here, baby. Come on. Look at that. I got a little poop too." She even gave me a little.
Oh man, scared the shit out of her.
Yeah, we'll leave her there for a minute. But
right.
But yeah, I have a call at 12. It's 11:58 Eastern Standard Time.
Right. Well, it's been good. Had a good call today. We'll catch up soon, Michael, and have a good call. But that was it, guys. You know, like I said, stay tuned. Next show, we're going to go over a few other things. So appreciate you guys listening to Real Talk today. All right,
we
Michael.
Can talk about
have a good day, brother.
Some new stuff popping up. New stuff popping up in the mortgage industry that that's going to be beneficial for investors.
Oh, okay.
And we could talk a little bit about new trends and things that came up in the at the trade show. So that'd be something we can cover in an upcoming. All right. Peace.
Absolutely, man. See you, brother.
Take care, brother. Have